Welcome everyone to another Be Informed session. My name is Carl Buhariwala and I founded Be Informed to help people make good decisions. Today's session will be covering credit files and lending. And before I proceed, I would like to acknowledge the traditional owners of the lands on which we are meeting today and pay my respects to their elders past and present. Before we begin, I'd like to remind everyone that this session is being recorded and it will be uploaded directly to YouTube following the conclusion of the session. Just a bit of housekeeping. If you want to submit a question to our presenters today, please send them through the chat function. You can send them directly to me using that button at the bottom of your screen that chats directly with the host. I will then relay those questions back to the presenters for their response. In terms of a disclaimer, this session is being presented to you in Australia. The information is general only and should not be taken to be personal or specific advice tailored to your needs and circumstances. If you do wish to obtain specific information about your circumstances, please do contact one of our presenters or anyone in the relevant field. The information is current as of this month, so we've tried to take all steps to ensure that the information that you have got on screen is current, but if you do wish to check the accuracy, please do that yourself. The session will progress with the first session, which will be on credit files and how they work, followed by business lending and novated leases. So we'll have a sort of a 5-minute intermission in between where we'll do a handover and then the second presenter will present, and then following that we'll have Q&A. So without taking any further time, I think let's jump straight into it. Daniel, you can kick off and I'll move to the next slide.
Yeah, thanks, Carl. And thanks for putting this together as well. It's good to hop on here and talk about credit files because deal with a lot of people that need help with issues that they come at, I suppose, really bad timing when they're applying for finance, whether it be a car or their house or something. They've got no idea what's on their credit file. So it's a good opportunity to kind of put some information out there because in this country, there's not much education around it all. So yeah, so as it says on the screen, so my name's Daniel Walker. I'm one of the directors of Voyage Credit Repair. So essentially, we've been running for about 3 years now. And what we do is, in a nutshell, we just try and help people remove negative data off credit files. So Carl, do you have to change to the next slide or you got it? Yeah, sweet. So just go through some bits and pieces tonight. So firstly, we'll talk about what actually is a credit score. So essentially what a credit score is, it's just a numerical rating of your credit worthiness. So typically it's going to range from 0 to 1200, but it does depend on what credit reporting agency you're going off. So I'll talk about them a bit in a minute, but in Australia, there's 3 main ones that you need to be concerned about, which is Equifax, Illion, and Experian. Equifax uses the 0 to 1200, whilst Illion and Experian typically 0 to 1000. Credit score wise, you're probably, I suppose, to be in a healthy position, you want to be somewhere above 600. That's where you'd want to sit. To at least have the most lenders available. Obviously, the higher, the better. But if you're above 600, generally it's considered healthy. So what's actually in your credit score? So there's lots of different information that is used to calculate the score. And I'll talk some more about as we go through this presentation. But you can expect to see things like a lot of your personal data. So obviously your name, date of birth, your address history. So generally it'll have 4 or 5 addresses and they can range from the past few years if you've moved a lot, or I've seen addresses on credit files that are from 30 years ago. So they do store a lot of information on you. Same as employment history and your ID details such as your driver's ID number. So mixed into all of that, negative data is what will push your score down. So the 4 most common things, which we'll talk about shortly, will bring down the score. But in this example, the misrepayments and credit defaults, those kind of things will reduce your score. Carl? some benefits to having a healthy score. So the main thing is that when you have a higher credit score, you've got access to prime lenders. So what that means is that your interest rates and your terms will be a lot better than if you're going to a subprime lender. So in terms of having that healthy score that I spoke about, so if you've got somewhere around that 600 to 650 upwards, will allow you or open you up to prime lenders. So every lender has their own credit scoring policy. So some lenders might want you to be above 600, some might want 700, something like that. It really depends. But generally speaking, if you're 600 plus, it's going to give you that access to prime lending. Whereas subprime lending, or the difference, I should say, between your prime lending and subprime lending is your interest. So typically, if you've got a lower score, it suggests risk. And if from a lender's perspective, risk means they need to protect themselves in some way, which is generally a higher interest rate. So if you've got that low score and you're sitting in that subprime interest rate and you do seek finance, you're going to be offered a lower interest rate, which then over the course of time can really stack up. Another benefit is, which is often what we deal with people, is that emergencies. Often people don't think about their credit scores. They might know that something's on there that's negative, but they don't really care about it because they don't have any plans to try and access finance in the next, short term, 1 to 2 years. But as we all know, plans change. So it's really good to have a score that's sitting in that healthy mark. So when emergencies do come up, such as if you need to travel interstate for a family affair, something like that, it's really important to have your credit score ready in those cases where something's gone wrong and you need finance fast. All right, so there's really 4 things on credit files that are deemed as negative. There's 4 main categories. So firstly is credit defaults and missed repayments. Credit defaults are basically a black mark against your file. So you've missed a repayment, you haven't made it up. Then at some point, a lender's put a default on your name. It's going to stay there for 5 years. Missed repayment. So if you ever access your credit file, you'll see some facilities have a 2-year repayment history. And it's basically, did you make your payment each month on time? If you miss those repayments, it will get marked and will sit there for 2 years. The next thing is court judgments. So, and these can arise out of financial matters, or even if you've got a civil matter that hasn't been settled, you can have a court judgment entered against you. Same thing, they'll list down there for 5 years. So those things are quite obvious that everyone is aware of those generally. But the thing that most people are not aware of that will actually impact your credit score is credit inquiries, which is what I wanted to talk more about on this slide. So essentially, credit inquiry, when you're applying for a financial product, or even it can even be a utility or a telco, as part of their assessment, they're going to look at your credit file to see if there is any of those things I mentioned, such as defaults and whatnot, which then results in inquiry being left on the file. Those inquiries will last for 5 years. So an inquiry is going to incur whether you're successful or not. So let's say you apply for a credit card and for whatever reason they reject you. Could be because you've got something negative on there, or it could be something else within their policy. If they've looked at your file, by that point, it's already stamped on there. So these kind of inquiries can start to stack up. If someone is looking for finance and they're applying all kinds of different places, can really impact the score. What we see commonly is that people might want to try and get the best rate, try and find out what's out there, what they're going to be offered in terms of rate. You might see 4 or 5 credit card applications within the space of a few weeks. And to a lender, that screams risk, that something's going wrong. This person is trying to seek finance for desperately, essentially, which might not be the case, but when you look at the paper, that's what it comes across like, and that's why it impacts credit scores. And just the last point here, so inquiries from lower tier lenders will impact scores heavily. So Places like payday lenders, I won't name any as such on here, but ones that are offering fast cash, 24-hour turnaround, those kind of lenders will impact your score for the same reasons I mentioned in terms of making lots of inquiries in the short term. Can suggest financial hardship because someone is trying to get money fast, and a lot of it. And it can mean essentially the more you do it, the more facilities you might actually have. So it's really best to try and steer clear of lower tier lenders if you can. Obviously, they serve a purpose and not here to give financial advice, but where possible, try to avoid it because it will reduce your score quite heavily if you start to do a few. And as mentioned, they last for 5 years. So if you're doing it over the span of 5 years, can cause a lot of damage. So try to avoid it. And we'll talk about ways in the next few slides as to things you can do to avoid it. Carl? All right, so how to protect your credit score. So most obvious one, pay your bills on time, or at least within the 14 days of the payment date. So setting up a direct debit is a simple way to try and fix that. But paying bills on time is really important. And if you can't pay them, and this leads me to the next point on here, is communicate with your lender. So if you're falling on hard times, something's gone wrong, as I mentioned before, plans change. So if something goes wrong, speak to your lender. See what kind of options they've got available to you. All lenders now will have a hardship department. So if you really need help, they'll be able to give it to you if it's genuine hardship or you need a short-term fix. It can impact your credit score in the terms of it will be reported as financial hardship, but it won't impact the credit score. So from a lending perspective, it's a bit easier to explain the issues around financial hardship, because financial hardship, whilst it's not great, often it is short-term. It's just something that happens, and it happens to everyone. No one's really exempt from falling on hard times, whereas not making a payment, not communicating, can be a lot harder to explain. Regularly check your credit file and consider setting up automatic alerts. So I think Carl will circulate a document after this. There'll be some information on that where you can basically go to the credit reporting bodies and set up a subscription. The cheapest one, I think it's about $5 or so a month. And essentially what it will do is that each time something happens to your credit file, you'll be alerted. So say if your details got caught up in one of these data breaches, for example, if you have alerts, you'll be informed when someone is trying to access your credit file. So that's a really important one. I'm sure a lot of people tuned in this call probably spend $15, $20 a month on Netflix or Prime or something. I suggest to all of our clients that invest in this kind of protection, because it can really help you in the long run, having that oversight as to what's happening on your credit file. And last point on this slide is use a finance broker where possible. So the way this protects your credit file is that before actually making an application to a lender for them to assess it, which is what leads to the inquiry, a broker is going to look at your financial situation. So your income, they're going to look at your credit file before it actually gets hit with an inquiry. So they already know what's on there. So then when they do make an application to a lender for whatever it may be, whether it be a home or a car, whatever it may be, they're going to have a reasonable confidence that it's approved. So that results in making sure there's not heaps of different inquiries on your credit file for the same thing. Kind of linking back to what I was saying around people trying to get the best possible rate. Rather than doing that, just go to your broker, because they'll be able to find the best rate available to your specific situation, and it won't result in heaps of inquiries on your file. Yeah, thanks, Carl. So fixing your credit score. So things that you can do to try and fix it when it has gone to that point. So if you notice something's been listed incorrectly under your name, such as a credit default, first thing is just talk to that specific lender about it, that credit provider. Find out what it's in relation to, and try and find out if they'd be willing to remove it in exchange for, say, payment, or trying to resolve it through their internal dispute resolution. So yeah, best thing to do if you notice something's been listed against you incorrectly is have a chat to your lender again and see what can be done to fix it. You can also lodge correction requests. So those credit reporting bodies that I mentioned, such as Equifax, you can actually go to them and list a correction request through their website. They'll investigate it and then they'll advise of the outcome. So it's a free service. They don't charge you for it. They'll essentially look into it and try and find the supporting documents behind it and see if it has been listed correctly. Same goes if you're ever looking at your credit file and you don't recognize an address or something like that. You can go to the credit reporting bodies and request it to be changed. You obviously have to provide supporting documents, but you can do that through their portals generally, and which will be the links will be on the document that Carl circulate as well. And lastly, consider using the skills and knowledge of a credit repair company that has a great reputation. So if you've got something on your file and you want the confidence of someone behind you, trying to help you, trying to drive the best possible outcome, suggest using a credit repair company. Just make sure that, like I said, they've got a good reputation and you do have protection in cases where they're not able to remove the negative listings off your credit file, because a lot of companies out there may want a large amount up front before they start work. If you're going to go down that path, just make sure that you've got protection in terms of a refund if the outcome is not in your favour. And that pretty much sums up the slides. I think, Carl, was that the last one?
Yep. Thanks, mate. Thanks, Daniel. That was a really good presentation, I thought, on a topic that not many people know about. I think they've heard of credit files when they sort of maybe go to a bank and try to apply for a credit card or get a loan, but they don't actually understand the implications of what that can actually mean for how much finance you get, how quick you get it, and all the other bits and pieces that go into it. So yeah, thank you very much for sharing some tips about what people can do and some important sort of definitions about key terms that they might hear about, especially credit inquiries. So Daniel's details are on screen, so they'll also be in the one-page handout as well that we'll share around after the session. So if you have any other further queries, feel free to contact him on those contact details there. Just a reminder, the session is being recorded, so if you do have anyone, family or friends that want to listen in, they can always attend our YouTube channel after the session and view the recording at their convenience. And if you have any questions, feel free to send them through in the chat to me as the host, and I'll relay them to Daniel and Matt. We've got a few other questions as well that we've received by email ahead of time, so we'll go through those as well for the benefit of those that can't make it today. So I'll move on to the next seminar, and I'll unmute Matt. So Matt will be presenting on business lending and novated leasing, and I think it'll be quite an interesting session for those that are in the business sphere. So Matt, over to you.
Thanks, Daniel and Carl. Evening, guys. So Matthew Johnson, Director of Fast Lending Group. We're a startup finance brokerage. We started around January. So personally, I've got about 7 years experience in commercial, consumer and novated leasing. And let's get straight into it, to the first slide. All right, credit acceptance. So you're more than a score. So do lenders credit score? Some do, some don't. That's the quick answer. So just touching on what Daniel spoke about, the importance of a broker, a broker that knows the policy of the lender. So for instance, I could have a business loan where the guarantor's score is 300 and he may get the same interest rate as if someone had 1100. So yeah, lenders do credit score, some don't. It's just up to their internal matrix. So credit files. So some files show 3 scores. Okay, so what do the banks use? Again, going back to the importance of having a broker. So we've got our comprehensive, we've got our 1.1. Equifax just released a new score called 1 score. So again, just depending on the lender that the broker selected, so you might qualify for no doc with one lender off your 1.1. So you could have a 700 1.1, but a 300 comprehensive score. So again, going back to a broker that knows their policy, knows their stuff. So credit file, what other factors come into play? So there's a lot of information that the bank actually looks at, even down to address history. So if you're going for a no-doc loan, you've told the broker you've been in your address for 1 year. Credit history shows 3 addresses in the last year. You know, that could prompt them to ask more questions and even ask for financials. So that's one example of what's on there. Age of file as well. So they're also looking at your date of birth versus how old the credit file is. So most people are applying for credit before they're 22 or younger. So if we've got someone looking for, say, $100,000 no doc, they're 58 years old, but the credit file is only 2 years old. So that would prompt us or the bank to ask more questions. So there's a section on there that has cross-match. So they could have changed names. They could have lived in a different state. And at that point, what the bank's trying to do is just to match the data from the 2 credit files. If there is nothing, it's very rare that a 58-year-old's never had a phone, a credit card, any kind of lending. They could be new to country as well. So that's another thing we look out for. So excessive or fintech inquiries impacting credit decisions. So some mainstream lenders are going away from approving no-doc loans if you have fintech lending inquiries. So say you're a construction company and you've been relying on cash flow loans, that could prompt for a bank statement or full doc. So avoid them at all costs. There is other options out there with invoice financing and a few other options, but definitely avoid fintech lending inquiries and excessive lending inquiries, as Daniel spoke on. It lowers your score pretty much. So whether it's commercial or consumer, every inquiry slightly lowers your score. So if you're going after that car loan and you've got 6 inquiries, some banks have rules. Like I was reading some new policy the other day, and their new lending rule was if you have 2 inquiries, they considered that being shopped, and now they want bank statements. So if you took that to 2 banks, they've asked a question, the rate's too high, whatever, you went there direct, you went through a broker, they're not interested anymore. They're trying to make it hard. They're going to ask for 6 months bank statements, the last 2 batch statements, and tax portals. So slow payment history, comprehensive credit reporting. So a lot of lenders now report your current credit application or deal on your credit file. So if you were to pay that over 1 month late, you'll have what they call a status 1. So there's lenders out there now that are approving mortgages just purely based on that comprehensive reporting. So say you got a mortgage with CBA, it's been running 2 years perfectly, you'll have 000 in there. The new bank wouldn't even require a loan statement. They're happy to approve it based off that comprehensive reporting. And again, that's the importance of having a broker. Like I know we've got lenders that you could have been 3 months behind, and there's a commercial lender that doesn't care about that. So again, the importance of a broker. There's lenders that still can't see comprehensive reporting data. So if they're not giving the data, they don't get the data. So again, back to having a good broker that knows commercial products. So we'll jump on to the next slide. So startup. So you're a new company, you've been trading 3-4 months. How do you access funding? You need that car, you need that cash flow. So we'll start at the top with continuity. So the bank's going to look at the business timeline and personal experience. So you're now a company. So were you previously a sole trader? Were you a trust? What was the industry? So you're a startup real estate maybe. You've gone out on your own. You've just gone from pay slips. So there's a lot of different rules and lending guidelines. So one of the most common is if you had 3 months ABN, in lieu of that experience period, they'll ask for a 20 or 30% deposit. So there's your risk there. Industry. Has your industry been placed on a blacklist? So during COVID, a lot of industries such as gyms, florists, restaurants on the blacklist. So definitely talk to your broker. So there's a lot of finance companies at the moment that aren't interested in the construction industry. So every other day you turn on the news, and there's a construction company that's gone bust. So they're very protective, and there's a lot of arrears in those industries. So deposit, again, like we spoke about earlier, this can decrease the risk to the lender of the startup. So you might be 3 months, that 30 to 40% deposit. The bank's happy to waive that. So most banks are wanting 2 years ABN to get that note off, but that deposit can get it over the line, as well as contracts. So you might have gone out on your own IT consultant, and you've got a 2-year contract. So the banks are taking a make sense approach to startup funding, along with bank statements, cash flow forecasts, funds in the bank. So there's plenty of options there. So we'll jump on to the next slide. Right, bank statement lending, good stuff. So using a lender or broker's banking link. So you've gone through an application, you've got an email that says, hey, click here, put in your login, put in your password. Is it safe? So majority of bankers are using Illion. So even government agencies are using Illion as well. So it doesn't store your login, doesn't store your password. It just comes through in an easy to read format, and it prevents fraud. Gone are the days of Joe Blow sitting there copy and pasting figures, trying to get them to line up. So essentially, you put in your password and your username, and depending on the account that the broker has, some of them force you to select all accounts. Some of them you can just select the one account that the broker wants you to see. So if we look at this little example here, so this one was a commercial account. So we can see the account holder, we can see the institution, we can see the period. So this banking link was a 3-month banking link. So that captures all data from that account for 3 months. The referral code, that's really cool. So some banks don't actually want me to send them this document. I just send them the document ID or the referral code. They can actually put that PIN number into their system, and they'll get that data live. So they know that nothing, there's no fun and games there. Reference ID, same as the referral code, submission time. And then we go down the bottom, we can see, I blacked out the account of BSB. We can see the type of account, balance, current balance, total debts, total credits. So looking at a bank statement, so every bank has different rules. So a common rule is retaining funds. They want you to retain X% of turnover. The statements break it down really easy. So they'll put, gambling into one category, credits in and out, motor vehicle, entertainment, all the rest of it. If you go below $0, they have a column down there called days in negative. So depending on the bank, again, they may have a rule, no more than 2 days in negative. Things happen. We get that. There's banks where the rule is no more than 30. So again, it just comes down to account conduct. So on that account conduct, personal versus business spending, highly recommend not mixing the two. So, if this account, for instance, so we've got a turnover here of 1.7 million. Now, a lot of these transactions for this account, it actually mixed personal with business spending. So it just slows down the process. So highly recommend that you have one for each. So if we could jump into the next slide. Novated leasing. All right, what is novated leasing? How does it work? What are the benefits? So if we look at this car here, so we've got a Tesla Model Y, 72,272 drive away. We've got the weekly lease cost. So this vehicle, so it allows you to pay for the vehicle pre-tax. So essentially, it's lowering your taxable income. So I've personally just finished a novated lease. So the way it works is you find your vehicle. It's pretty much an individual chattel mortgage. So the leasing company will invoice your employer for that vehicle. And gone are the days, there's a lot of rumors around where, you have to use their fuel provider, all the rest of it. So me personally, with my novated, they sent out 3 fuel cards. If I didn't want to use it, I could even use my Amex, get my Qantas points, and they reimburse you. So essentially, you're setting yourself a budget for the year, kilometers, dollars-wise for insurance. Some people just want the car payment. Some want the whole hog. They want tires. They want servicing. They want the works. So it's really, really up to you. And at the end of the day, if you're going to spend that money, you may as well pay for it pre-tax, just to lower that figure as well. So if we can have a look at the benefits there, what products can be packaged. So anything, even down to car washes, like any vehicle-related expense within reason can be packaged. So car insurance, tire and rim insurance, the lease payments, car washing. Maybe you're part of a car club and there's a membership as well for a high performance vehicle. You can even put that membership in there pre-tax. Cool. So we can jump on to the next. All right. What's the benefit of the small business? So it's an effective pay rise for the staff. So it's improving the staff members' cash flow. It's also an important tool to recruit and retain staff. So not too many businesses offer novated leasing. They just put it in the too hard basket. It's not that hard. So we partner up with One Car, so they manage all the accounts. You just get an invoice that coincides with your pay cycle. So essentially, they manage it from start to finish. You'd have logins. It'd roll in with your payroll software. And it's just a great feature to offer your staff. So it's very, very competitive to retain staff at the moment. So this is a really, really good tool. The last note there, so potential savings, possible reduction in payroll tax costs. So that really only applies to New South Wales and large companies. So we'll skip over that one. And that was the last slide, I believe.
Thank you, Matt. That was great. Hope everyone took away something from his presentation. His details are on screen, so if you do have any queries in relation to those matters or areas of interest, then yeah, please feel free to reach out to him and discuss directly. So we'll now move on to the Q&A component, which I think is really good in terms of allowing you to ask questions and also getting some one-on-one sort of feedback if you have any sort of queries about the content presented today. I'll unmute Daniel as well so he can respond as well. So what we'll do is we'll start off with, because some questions come through the chat, we'll start off first with the questions that we received by email ahead of time, and then we'll move on to the questions that have come through in the chat. So Daniel, the first one's for you in relation to credit files. And you mentioned the issue around credit inquiries and how that can have a negative impact on your credit file. How practically can someone really manage that? I think if someone's applying for a phone or for utility and they move around or they try to get a good deal, does each and every inquiry sort of just pretty much lower the score, or does the lender that's reviewing that score sort of apply a bit of sort of practicality to reviewing those multitude of inquiries?
Yeah, good question. So I suppose with inquiries, certain inquiries will do more damage than the others, and that's what I was saying around the payday lenders, the buy now, pay laters. They'll bring the score down. Whereas ones like utilities, phone contracts, those kind of inquiries, whilst they will add up to it, they're not going to have a huge negative effect on it, because at the end of the day, that's something that everybody has to have.
Yeah.
You have to have utility. You have to, well, I don't know anyone that doesn't have some form of phone contract these days. And it is spanned over 5 years. So, unless you move address every say 6-12 months, you're not going to have a whole lot of energy provider inquiries, unless, of course, again, you shop around. So, and that's where I think there's sites involved and whatnot that you can do comparisons and things like that to add an extra layer of protection. But the most people over the 5 years might only buy one house, for example, maybe two, if you're doing well. And same with cars, that might get rinsed a bit more than, say, a house, but in the space of 5 years, you might go through maybe 2 or 3 cars. Matt's probably a better person to go how many cars people use these days. Oh, you muted as well?
Yeah, just on that as well. Like I see probably just as many credit files as Daniel, unfortunately. But looking at that, it's being decisive. Not doing your research before you act. Don't just jump online and go, oh, I want a personal loan. Cool, I'll check what my bank's offering. Oh, Google this one. I'll check what they want. Check what they want. Before you know it, you've got 3 PL inquiries, and you haven't even submitted income docs, and you may be against their policy. So it's just being decisive, doing your research up front, and just not going down that rabbit hole.
Yeah, definitely. I think that's what we were saying in terms of using a broker as well, is that outside of the things that everybody has to use, such as the utility and phone contracts, there's a finance broker for just about every type of finance now. So when you're looking at a new car or a new home or a new investment or just a personal loan, for those emergency that we were mentioning, just try and use a broker, and that way it might save you 4 or 5 inquiries if you're doing it yourself, because most brokers now are going to have at least 30 plus lenders on their panel. So before submitting anything, they're going to find the top 3 or 4 that the most competitive for you. So yeah, it's just trying to limit, try not to add anything unnecessary. And if you do need to seek finance, just try and use a broker where you can.
Yeah, some good advice, especially for those that might be sort of dealing with the difficulty of inflation right now and cost pressures, and they might be sort of reviewing their credit card providers and all the other sort of access to sort of short-term financing. I guess they should bear in mind.
Just on that as well. So there was a major PL bank that changed their policy yesterday. So anyone that's tier 3 now requires bank statements. And 2 inquiries could be the difference between tier A and tier 3. So tier A and B, you wouldn't need bank statements, and the difference in those interest rates are about 7% apart.
No, really?
So,
yeah.
On a 30 grand loan over 5 years, that's quite substantial in repayments.
Yeah.
And something else as well, if I can add, is that when people are shopping around for their rates, in this current climate for particularly their home loans, is that you don't necessarily need to refinance to get a new rate. Again, if you're using a mortgage broker, what they'll do is, before refinancing, any good one anyway, will go to the lender that you've already got and say, can we want this renewed, or we want it reviewed, and try and get a few percent off, or points, I should say, not percent. And that's one way of keeping your current lender honest and avoiding any inquiries. So I think that's a good point, that you mentioned, Carl, around the current climate. Everyone's trying to get a better deal around their home loans. And quite often that deal can be found with the current lender you've got. They just need the right person to be putting pressure on them.
Yeah, no, there is benefit in engaging with the mortgage broker to sort of assist with those discussions, because they sort of know the industry and they know the banks they're dealing with. So they've also got the connections as well internally, so they can get the right people on the right side and send across the right information as well, so you can get a better deal. Just on credit, accessing your credit report, Daniel, one person has asked, is it a simple process of just applying to one of those sort of credit providers, those reported bodies, sorry, and sort of obtaining your credit file quite simply? Is that how it usually works?
Yeah, exactly. So on that handout that you'll circulate after, the link will be on there. The most common one, or the biggest that I'd suggest to make sure you do request, is your Equifax file. And it's a very simple process. You just go online, fill out your details, upload a identification document, and then they'll obtain that report. Generally, it's pretty quick. you should get it the following day generally. But if you've got, say, if you don't give them all the information they need or have a very common name kind of thing, it might take a few days, but generally very straight process. And that goes for all of them that will be on that handout, is that just go onto their portal, enter the details, and then they'll send a copy of it to you.
Yeah, and the second part of that person's question was just in relation to, I think you touched on this, Daniel, and also Matt as well, the recent sort of data breaches that we've had with some large companies and data being shared around. If they do find something suspicious, and you mentioned, that you can get it fixed, do you have any experience, Daniel, in how sort of straightforward that process is, or is it a bit cumbersome and requires a lot of evidence on your part to disprove some of those notes on the file?
If something's already on the file as a result of fraud, and this can go for any case, because fraud happens all the time, unfortunately. Doesn't take a data breach for that to occur. That just accelerates it, unfortunately, but it's happening all the time. So if someone goes out and gets their credit file, notices there's some address you've never lived at, and there's a few inquiries here that you don't have any recollection of doing, the first thing you want to do is probably, especially if it's recent, you probably want to consider reporting it to the police. So then you've got a record of that, because when you do go to lenders to say, hey, this isn't me, someone's fraudulently used my details, one of the things they're going to ask for is the police report number. So it can be a bit more challenging to remove cases like that, where things have been put on there, because the lender that's involved 9 times out of 10 will want to see some documents to support it. So that's the best place to start, is contact the police, and then contact the lender and have a chat to them about it. Ask for the copy of the application to see what information was there, and then take from there if you want to proceed. If you say to them you think it's fraud, they'll give you their specific steps on what they want to see for them to investigate it further.
Cool. You can also put a stop on your Equifax account, so no one can access it and no one can leave an inquiry. So contact Equifax immediately, lock that file. So no credit provider, even a broker like myself, if I went to pull the file, it'll come up, notice this file's locked. It's happened before. Ring the customer. Oh, that's right, I forgot I locked it. Someone put a few fake inquiries through. They're the only ones that can unlock that file. So essentially, for credit purposes, they don't exist anymore until that's been resolved. So definitely make that your first point of contact to lock that credit file.
Yeah, those are 2 great tips, sort of reporting to the police and locking the credit file. Another question that we've received, Daniel, on credit files is in relation to sort of the, paying on time and all the rest of it, right? And you're saying, you should pay at least, 2 weeks in advance. One person has asked, well, if I'm a bit late in paying, 2-3 days or maybe a week or so late regularly, but the provider is okay, and sort of offers that extension, and is a bit sort of flexible in that regard. Do they want to know whether notes are being put on their credit file which may adversely impact them in the future? What flexibility does the provider have to sort of put a bit of additional color on that credit file, which may not be in the best interest of the individual consumer?
Yeah, good question, because I think in listening to that question, I think maybe I could have been a bit clearer around when I mentioned the 14 days or the 2 weeks. So there's kind of 2 parts to it. So let's say your payment for your personal loan is due on the 1st of the month. If you miss that, don't make it on time, direct debit bounces, something like that, you've got 14 days to make those arrears up. So if you say you realise a week later, this payment hasn't come out, you fix it up 7 days later, and the payments the arrears have been made, then it's not going to impact your credit file. Once it ticks past that 14 days, so it's kind of like a 14-day grace period from the date the payment's due. So if it's outside that 14 days, that's when it will be reported as late. And that's when it can be very difficult to have something like that overturned. So and that's where those direct debit, whilst they can be a bit painful, direct debits, like if you've got a lot coming out, if you can have it on those kind of facilities, those are the ones that protect your credit file. For example, if you go to the gym, you've got a gym subscription and you miss that, it's not going to come up on your credit file. But your credit cards, your personal loans, things like that, those are the ones you want to have that extra layer of protection. So, yeah, sorry yeah, just add a bit more clarity around that. 14 days.
And just with lending as well, like it's so important. You know, you might be talking about personal car loan for $15,000, and you've made 2 payments late over a 1-year period. You know, you made them up within 2 days. If that bank rings that other bank, the new bank rings the old bank for a credit reference, they're going to rate that slow. You know, they don't care about the story behind it. Was it made on time every time? No, it wasn't. Next. Okay, so that's back to the importance of a good broker. You know, you got banks out there making decisions for $250,000 just via a phone call to another bank saying, "Hey, did this fella make his payments on time?" So it's just super important to communicate. Like if you know you're going to be late, you really need to communicate that to the lender or the service provider, and make alternate measures to get that payment in straight away.
Yeah.
So whilst it may not go on the credit file, it's always going to show on that loan statement.
Yeah, I think good to have good communication with your lenders and your brokers to sort of make sure they're on top of your circumstances as well. Matt, we'll throw to you a question that we've got as well by email. It's just in relation to the some of the the inquiries that you might make for fintech purposes. People are getting sort of a bit creative with their access to cash and all the rest of it. Do you see there's a big uptick now, given difficulties in accessing maybe the more mainstream sort of debt markets, by people sort of going to the more newish, I guess, lending sort of practices? Do you see an uptick?
Yeah, I guess it really comes down to their time in trading. You know, like I get a lot of calls. You know, I have one today, for instance. So the guy's been trading 16 years, turning over $100,000 a month. Needs a loan ASAP for cash flow finance for 30 grand. Reached out to his bank, one of the big 4. They don't have time for it. 2-week turnaround. He needs the money to fund an order ASAP. What do? Do you take him to a fintech? Do you put that inquiry there? Do you put him with the mainstream? But again, it's balanced. You know, like if you've got a credit file, you know, it's showing inquiries for the last 5 years, and you've only got 1 or 2, that's fine. Versus continual use of those facilities, you know, where sometimes I'll see a guy come through and he's got every 45 days, you know, for the last year, inquiry, $0, direct to search, fintech. That's highlighting a larger problem with that business versus a one-off, inquiry for that funding.
Yeah. And could you just remind everyone what low doc, no doc sort of financing is, just so we're on the same page?
Yeah, so low doc is where we provide no financial data. So for a low doc, traditionally you've got to be over 12 months ABN. The company or the director of the company needs to have property backing in their name, and depending on the lender, you may need a credit reference. Versus alt doc or light doc, that may just ask for last 2 BAS statements in tax portals. And full doc, you've got your 2 years of financial statements, tax portals, BAS statements, bank statements, all the rest of it.
Yeah. And the second part to that question was in relation to, you mentioned around directors having property behind them. How common is it for the lender to be asking for guarantees, from the directors around sort of?
Unless you're a large institution, you're always going to have a director's guarantee. So depending on the bank, you might have 3 directors that are 33% shareholders. Generally speaking, they're going to want over 50% of the directors to guarantee. There's a few lenders that only require 1, but the majority of the market are going to want over 50%. So if you had 3 directors, they're going to want 2 personal guarantees. If you had 5, they're going to want 3, and so on and so forth.
Yeah, and I think it's always worthwhile reminding everyone to sort of get sort of their legal advice on signing before they sign those guarantees, to ensure that there's nothing sort of untoward or unexpected in those documents. So
and you know what, reach out to your broker. Things happen. There's genuine reasons that you may only want 1 guarantor. You might have a guarantor that's going through a divorce, has a poor credit score. Reach out. There's options out there for 1 guarantor, and no credit reference, no credit check on the other guarantors.
Yeah.
So there is ways around it.
Yeah, cool. And just on novated leasing, one person has asked, is it just in relation to vehicles, or can they also, like, what else have you seen sort of come under the novated leasing sort of umbrella?
Oh, it just depends on the employer. So if the employer was non-for-profit, there's a whole host. I've seen a lot of people coming through with their salary sacrificing living cards, where like my wife personally works for a non-for-profit, and she gets deduction out of her payroll, and it gets put back on a living card for living expenses. So essentially, she's paying down a portion of her living expenses pre-tax. So, and I've even seen people have mortgages or the rest. It really just comes down to the industry of the host employer.
Yeah, yeah. Okay, so there's sort of a raft of sort of fringe benefits, I guess, that they can offer to their employees, and as you mentioned, that sort of
exactly.
retain talent and offer a good proposition when people want to join the company. So just a reminder, if you those were sort of the email questions that we've received. Now I'll jump through to the questions that we received through the chat function, and I'll go back to Daniel. This one's on credit files. If people do need to get financed in an emergency situation, right, and they want to get the best deal out of it, is the best option just to go for a broker? If they do it sort of by themselves, might they find themselves in a situation where they're raising too many inquiries? Like, what's your recommendation? Should they go through a broker, or try and sort of do it themselves quickly and maybe risk the fact that they've raised too many credit inquiries?
100% use a broker. So those are those exact situations that can cause lots of damage. If you need emergency funds in the next the next few weeks, and you're going crazy, desperate, trying to get, say a $5,000 or $10,000 small loan, if you get knocked back a few times, starts to add up, starts to reduce your score, and then it gets to the point where you're just not getting approved for anything. So, yeah, 100% use a broker. And like I was saying before, for any financial products, there's a broker for it. So even in cases like that where it's just a small loan in an emergency to say get you some flights to go to another country and back, there's brokers that specialize in personal finance or personal loans where there's no asset or car or anything attached to it. It's purely just a loan to serve a purpose. So yeah, 100% use a broker where you can in those cases as well. And if you need funds in an emergency, you're probably going to need it quick. And if you want it done quickly and done it right, that's where you'd use a broker. Because if you want to get the product for you, that's what a broker is going to do. They're going to assess your situation, and you might say to that broker, "I'm not too fussed about the rate. I just want a loan that is going to be funded quickly because I need it quickly." So you might not get the best possible rate, but what that broker is going to do is look at, okay, these are the lenders that will do an assessment in the next 24 hours if we submit it, and this lender doesn't care about X, Y, and Z that might be causing an issue with other lenders that's on your credit profile. So, yeah, I think being consistent with that is just try and use a broker in any circumstances where it's related to finance. Just use a broker, and everyone knows a broker. If you don't know one yourself, no doubt someone that's close to you has used a broker, and if not, that's where you've got your friendly Google reviews as well. So probably like I was saying, if you're going to decide to use a credit repair company, make sure you use one with a good reputation. Same goes for brokers.
Yeah.
And just touching on that as well, like a personal loan, to me, a quick turnaround time. Like we've got personal loans that are funding in 4 to 6 business hours, provided that you meet that criteria.
Mm.
I could submit one now and have RTGS funds in your bank tomorrow lunch. Personal loans are heavily off credit score at the moment, so it's pretty much, if you're full time over 6 months, it's very, very credit score dominant. So it's quite a quick process. And just touching on that, a broker for every scenario. Like we're doing things from architect software to menu boards at a Red Rooster. Like they're 40 grand a pop for those screens, just so you guys know. But we finance everything in between, from trucks to software to signboards to ovens for bakeries, $100,000 ovens. But yeah, you're right. You can find a broker for any financial product.
Yeah, that's some good tips. Yeah, and then just keeping a credit score healthy makes it a bit easier for yourself. And interesting question for Daniel, and on credit files, of course, it attaches to the individual. Can it ever attach to a company or a trust?
Yeah, 100%. Good question. Something I could have mentioned as well is that just like every person has their own credit file, it pretty much goes for any entity as well. So companies, businesses, things like that. If they've got applied for some sort of credit at some stage, then or that entity's been used as part of an application, then it's going to have the credit report attached to it.
Cool.
Correct me if I'm wrong, but trusts don't have files, yeah?
But the trust might have it, yeah.
Yeah. Only
I've
company.
never seen one with a trust, to be honest. So that might be one. Yeah. But and it's the same with company and business credit profiles. Is that if they've been involved in an application or a loan that's gone sideways and there's been something listed against it, it will also show on the company credit file.
Yeah. And at a high level, Daniel, I don't want to sort of, you just share all your tips and tricks, right? But this person has asked, well, if they are hitting a brick wall where, I think their credit file is probably not in a good position at all, and they're not getting any response, or the broker's a bit, lost for what to do. What steps do you sort of take in your company, Daniel, to, at a high level, of course, to help them sort of get to where they need to be if they can't get any access to credit?
Well, first thing what we would do, which is consistent across all clients, is we'd look at their credit file. So we'd have a look at it and we'd do a bit of an assessment to see what is the main issues causing the low score. So every file is different, but we'd look at it and just say this is the first one or two things that you'd want at the highest priority. Might be a default, or it might be a court action or something like that. We want to try and focus on to get off the file. If you can't get that kind of information off the file first, then it might not be worth trying to do anything else on the file, such as inquiry. So certain things will take a priority over others. And as I said, all things have a lifespan on a credit file. So if you've got a credit default that's been there for 4.5 years and it's causing you trouble, it's the only issue. Probably what I would say in those cases, if you've already gone through the process and you've asked the lender, you can't get rid of it, is just don't do anything for 6 months. Let that fall off the file and then reassess once that's off. So it's hard to answer because every case is different. But from a high level, I would say try and pick out one or two of the highest priority issues and try and get those taken off the file. And that's where like a credit repair company can assist. At the very least, clients that come to me, if they don't decide to proceed, very least they walk away with is education around their file and what they need to be focusing on to get it back into a state where they've got access to those prime lenders, like I mentioned in my earlier slides.
Yeah. Sorry, Matt, I just muted you because I think we had a bit of feedback coming through, or a bit of echo. Matt, this next one's for you. In relation to business lending, if someone has just started their business and it's been a few months only, can they still access credit, or do they have to have built it up for over 12 months before they can sort of, as you mentioned, they must have an ABN for 12 months and probably haven't been trading for that period of time?
No, there's products out there for one-day lending, There's even no-doc products out there for one-day lending where if you've got property backing, 10% deposits required and cash flow forecasts from the accountant. So it really depends, like I said before, touching on the contracts, your personal experience, your credit score, the industry that you work. There's so many variables. There's a lot of funding out there for businesses that are 3 months old.
Yeah,
It's not that difficult. speak to a good broker. They'll run you through the requirements. It could be as simple as just getting a 3-month bank statement, just seeing how trading's been going for that first quarter. That could be enough, and it comes down to, is the asset for direct to use? Is it a income producing asset? There's so many variables, but there's options for 1 day ABNs out there in the market up to 100,000. So
Yeah, yeah. And you mentioned a point. One person's asked about long-term contracting. If they have, they might be entering a long-term sort of agreement where they might be selling product down the line, and they're not going to receive cash flow for probably the first 2 or so years while they're sort of building it out or doing some R&D. Can that assist? Can those type of contracts sort of assist with,
yeah, definitely. It
cash flows? Yeah,
it just gives the lender peace of mind, doesn't it? You've got that industry experience, obviously, to get yourself that contract. You've got a long-term contract. You may have rateable credit as well. You've had a car loan in the past, so you're ticking all the boxes other than the ABN length. Most of the time, the bank would take a punt on that file. You've got that contract, that experience, all the rest of it.
yeah, cool. And actually, we just got another question for Daniel, just on the credit files. I think that touched off the question that I raised, Daniel, around, can a company have a credit file? And you said yes. When when a company itself wishes to get finance, does the banks also look toward the credit files of the directors as well, or do they just look solely at the company and they don't go to look at the credit files of the directors, or is it within their remit to do that as well?
Usually, it's probably a better question for Matt, in terms of what a lender is going to look like if there's if that's involved. But I believe the short answer is yes. But Matty?
Yeah, I'll run into that one. So 95% of banks aren't really going to care what that company score is. They're going to check it. They're going to make sure there's no external administration, or there's no defaults, there's no overdue accounts, serious infringements. There is lenders out there that do no-doc lending, and they're going to want the guarantor's credit score to be above X. They're also going to require the companies to be above X. If it's below, they're going to ask for a bank statement or some other form of document. But most of the lenders, they're pretty lenient on company credit score as long as there's no infringements.
Yeah. And we've got a final question which has come through, which I think will, it's quite interesting. Like, with experience, Ilian, I know they've been around for a very long time. Sort of, can we really trust the metrics that they're using to produce those scores? Daniel?
Trust is a funny term to use. I mean, don't really have much choice. Like if lenders are relying upon said score as part of their credit assessment, then can't really do much about it. Unfortunately, we just have to do our best to, I guess, play that game, in terms of having the highest score possible and taking care of it. So whilst it's not credit scores are never a reflection of a person, it's really just their credit profile. So it's a bit of an interest. No one's ever asked me that if we can trust them. But I suppose the answer is we don't really have much choice here. It's just something that is used as part of credit assessment. I think my personal opinion is that it shouldn't be across 3 different credit reporting bodies. There should just be one tool that is used across the board, because using 3, some lenders might use all 3, whereas another lender might just use 1. And then what that creates is confusion, around which report is this lender going to look at. Sometimes I've got clients that might have a default listed on their Equifax one. Then we look at the Ilian one, they've got a different default listed on it. It's not on the Equifax. So it can just cause more headaches around it. But, that's not a problem for me to solve. Just got to try and work within the parameters of it. But,
yeah.
I'll touch on that as well. With, like you said, the 3 different credit providers. Like I've done thousands of loans. I'm yet to see a policy that doesn't go off Equifax score. Okay, doesn't mean they don't check the 3, but I'm yet to see a policy that uses anything other than Equifax's credit scores. And on touching on the fact, can we trust them? Well, the system works, doesn't it? Like, I'm privy to information, but the bad loan rates, they're low. So it works.
Yeah, good answers. All right, well, thank you both. I think both of you provided great seminars and interesting information to the Q&A as well. So I'll just reshare on screen their details. Thank you, Daniel. Thank you, Matt. It's been a pleasure for you presenting today. Just a reminder that this recording will be shared on YouTube directly after this session. So if you have missed any part of it or wish to tell family and friends about it, please send them the link and they can watch it at their convenience. I'll be sending through after this session the one-page handouts prepared by both Matt and Daniel. It'll have their contact details on there too, plus some information summarising what they've shared tonight. Otherwise, I think thank you very much for attending another Be Informed session. We want to make sure that people make good decisions by having access to information that is reliable. It's purely objective as well. There's no affiliation to be informed in any way, shape or form. So these both Daniel and Matt have volunteered their time today to share information which I think can be used by everyone in relation to their personal matters, whether they're seeking a loan or doing refinancing or other money management activities. We might send through a session survey after this, after today as well, just sort of seeking your feedback. So we welcome you to share your thoughts on today's session and any sort of future topics that you might want to hear about in the future. Our next session is on the 17th of May and will be presented to you by Ernie Thai, who is Director at Trident Financial Group. He'll be talking about the top 5 budgeting tips to help you get your next investment property. So that should be a good one to attend for those keen to sort of broaden and diversify their investment portfolio. Other than that, I think that brings us to the end of our session today. So thank you all. Thank you, Matt. Thank you, Daniel, once again. And everyone have a good night. So yeah.
Thank you, Carl.
Cheers, Matt.
Bye, everyone.